And welcome to another live stream. Welcome here to the maybe number one live stream that is talking now about the live market. And let me just set up. So today we will talk about the second wave, maybe a very, very underestimated event that could really bring the stock market to a collapse. And we will talk about what is currently going on, where the markets are, and why I'm thinking this could happen. And before we diving in, make sure to let me know where are you watching from. And guys, if you like this live streams, make sure to thumb up as always. And I have the first comments here by Satellizer. I hope I pronounced the name right. Ellen to the moon, bro. Battery day, bro. Yeah, that's out of a meme that I have seen a couple of days ago. So yeah, let's directly dive into it, because we talked about the market already, but the second wave is something that is coming on. And it's something that not only is anticipated, but is really something that is to be taken seriously. This is a normal behavior, because think about it this way, that we are creating a new environment for the health situation to come back, maybe even stronger or harder. It all depends on how we can now fix our social gatherings and make our world safer, right? It's all about this, because more and more of US and other countries in the world need to escape the quarantine to make things much better than they were. And obviously there's the risk here involved, because as soon as we leave the lockdown, as more contact we have with people, and more people get infected, and more people will use the health system, and the health system has an approximately limit that they cannot take more people. As for example in Germany, I know this number by heart, the infection rate, if it's above 1.1, I think, then it's getting critical, and they have the one of the best health systems out there, right? So I'm very curious how this will play out, and the markets will definitely be affected by a second wave, as we will see now, because the markets are at a very, very high valuation, guys. Okay, so this is a nice graphic that I prepared here. As you can see, that's the forward 12 months PE. So this means looking forward, what will be the approximately PE of the market, considering the higher prices, the less earnings, and as more higher prices we have and same earnings or less earnings, then obviously the PE ratio gets higher here, and we are looking at something around the 20s, which is a level that we had the last time during the .com bubble, guys. Okay, so you see here how much of possible high levels we are. We are actually priced. This is a nice way to put it. I think we are priced to perfection. Okay, we are priced a V recovery. Okay, a V recovery. We will look into the graph of the stocks today, but the V recovery actually means that the stocks and the economy went down, and the stocks went up again, but the economy stayed low, right? Because the current situation is really unprecedented and really not really to catch what is happening, right? We are somehow feeling that we have to stay at home, so people lose their job, some people work less, some people work from home. Everybody feels like the economy is slowing down. Some other markets, like the tech market, is saying it's the time of our life because the digitalization is moving forward. So many different things we are experiencing depending on the field, and therefore it's maybe something very, very underestimated that can hit the market right now. So just so you know, I'm just watching the market here beside, so we can jump into the market real quick, because the market will close in 14 minutes. So the last bets or trades that you can make for today can be placed in about 13 minutes. So just for your information. Let's have a look into something else, because I love the PE ratio as a measurement, but sometimes it can be a little bit, let's say, growth stocks. Imagine growth stocks, right? Growth stocks can be very tempting, but the PE ratio is very high sometimes because the earnings, the price is high, the earnings are very low because they are growing so fast, and the stock is pricing so much future in the stock price, right? So some people could argue, the PE is so high because we are expecting some vaccine and some recovery there, okay? Let's go in this argument in a second. This would mean that we would need to look in the PEG, so the price earnings growth ratio, which is a very fantastic ratio, especially if you're looking into growth stocks, because it's taking the PE ratio and it's dividing by the growth of the company. So you can imagine, if the price of a stock is high and the earnings is low, we have a high PE, right? But if we divide by a high growth rate, then we have a low PEG, and as lower the PEG is, as better is this growth stock, or is better the valuation of the whole thing. So this means the following. I believe that if we are looking into something like that, we need to make sure that comparing this to a normal rate, right? And you generally say that a PE ratio of 1 is approximately good, and the PE ratio of everything of 1, above 1, is expensive, and everything below 1 is obviously very cheap. So let's have a look how the PEG ratio on the current market situation would look like. So here we have the PEG ratio, and we are somewhere at 2.1, so very expensive, okay? But that's normal, guys, because think about it. The PEG ratio is showing us the PE ratio that is quite high as of this moment, and we have basically very less growth, right? Just the tech companies are growing, and therefore I believe this is very important to understand. 1 second, I just have to close here something on my phone real quick. And so basically you see this is very, very high also compared to the other countries, the other centuries since 1980s. Is it 1985? I think this chart starts. So since 1985, this is the highest PEG ratio that we ever had. Okay, so we established now the most important thesis that the stock market could be a little bit expensive, right? So let's have a look into what would happen if the stock market would experience a second growth. Now, we are at very high levels. We are at very high levels, and we are at a second wave, which would mean that when the second wave hits, this would be catastrophic, guys. Really, really catastrophic for the overall situation, because if something is very much high priced, it can fall very, very strongly. And this is not something new. We just saw it, right? We had really all-time highs almost in mid-February and fall down to very low levels in a very short time. And therefore, you know, like many others out there, it's possible that once the second wave is coming, that we will see the stock market melting. So let's have a look. What else? This is important, guys. Before leaving the live stream later on, make sure to smash that like button, and also obviously look into my today vlog, which I'm explaining how to find undervalued stocks right now. I think it's quite interesting, because this time I thought it's maybe not so interesting to just see, you know, which stocks are undervalued in my personal opinion, but how you can find those undervalued stocks by two measurements. One is more speculative in the growth investing scene, and the other one is the value investing scene, looking into assets of a company with examples and everything. So I hope this video can help you guys to become a better investor, and obviously I'm super happy if you thumb up all of these videos and smashing that like button. But let's see, do we have already signs? Let me see if I think I don't prepare the picture, unfortunately. But I can do that real quick. Because I have found a very nice picture here by the Financial or Global Times. You should now see the picture, if I'm not mistaken. So you see that this is a little bit of an information about China, and they just shut down part of a new million habitants city, right? Shulan is the new, maybe a new area where cases come up. We have seen now cases was almost not there at all, and then now the recent days it reported 12 new local cases. So not important cases like they always like to say, but local cases. This means that somewhere around there, I think it was in Shulan, it was like an apartment building where someone was sick, and therefore, you know, we saw new infections over there. So, you know, and also new data from South Korea comes as well, that there's also some wave coming up. So we shall see, you know. I think this will be very important to watch, guys. Watch it very closely. And before the market closes in 6 minutes, I want to have a look with you guys what we can see. So let's have a look. So Apple is positive. Then we have SpaceX. SpaceX, not SpaceX. It's a space. It's not SpaceX. It's the space stock that I'm following very much, because I want to invest into the stock Virgin Galactic, but with the name here SPCE. PE. So this is quite interesting. They lost about 4% now on a huge strike since days, down from 21 to about 15.85 levels. Okay, this is a decrease of 26%. Most of it is because also Richard Branson is selling a couple of stocks because he needs to raise some money for his other companies that are heavily hit into the overall situation with travel, right? He has like Virgin Atlantic, he has Virgin Airlines, so many companies that are now heavily hit. Beyond Meat slightly in the plus, Tesla again plus 1.4, Shopify a little bit in the minus. Win had a huge gain today from 70 levels to 78 levels, 9% during the day. Amazon a little bit positive, the S&P and the Dow Jones both more or a percentage point positive here. Netflix a little bit positive, crude oil is up, and Carnival is a little bit up as well. So therefore, this is the market for today, guys, and let me have a look into the comments. So we have DRK, our regular, Atlanta. We have Hugo, our member. So if you're interested into becoming part of this community, I can recommend below all my videos and live stream is a button where you just press join and then you see all the membership options. It's cheaper than the Netflix membership and you become a better investor. So have a look into that. We have people from Singapore there. We have Poland. We have what else we have? Let me have a look. Germany as well. So lots of European people today. That's very nice. And US as well. So there is someone asking me if I'm shorting the markets right now. Maybe because of my recent video that I was shorting Apple. I was just, sometimes I make really microscopic bets on the market because I think there's good opportunities. But on the really thing that make you money on the long term is the long term. Okay, you can make huge amount of money if you are betting on the technology and companies of tomorrow. And for me, the top 3 companies are Tesla, Beyond Meat, and Virgin Galactic, after lots and lots of companies that I review on a daily basis. Don't forget, I'm doing full-time investing and YouTubing. So this is my full-time job. I don't have anything else to do the whole day, since you see so much content as well as so much information about the stock market, and I hope this can create value for you guys. Moreover, I am looking always for new opportunities. I was not so convinced by Virgin, for example, but Virgin convinced me over the last couple of weeks. And if you want to know more about that, there's a video just recently posted a couple of days before where I claiming that Virgin Galactic could be a $500 stock. But think about long term, guys. Shorting the market is very difficult and you can lose a lot of money. And always remember, this is just always my personal opinion. And I'm not licensed or a financial advisor, and this is for entertainment, information, and educational process and information only. So I think that's it for today, and tomorrow much more, the last trading day. So we will have super exciting news and a new vlog and a new live stream. So make sure to stay tuned. Thank you very much for watching, and I see you tomorrow.